in terms of learning, and this of course came through very clearly in 2020, as I always say, the number one investment mantra is risk control. So, that one has to always keep in mind if you are investing that you must always, and as I said, last year, February, March, this came through very starkly when not just individual investors, but a number of funds went down 35-40%. And once you're down 35-40%, it takes 50-60% of an up move to get you up there. So that has been, I think, the amount of topsy-turviness we saw last year, that risk control is key. That should have come through to everybody. So avoid the big losses. That's number one. And there are actually, as an investor, two things you must keep in mind. One, every time you make a decision, you must be clear that all your decisions will not turn out okay. That does not happen for even the greatest investors in the world. So forget about anybody else. So not all decisions will turn out okay. So therefore, you have to have some stringent rules laid out up front as to what you are going to do when things don't go your way, because otherwise, if you leave it, your stock will be down 20%, 25%, 30%, and you will still be in the mode of thinking and on a hope that this will turn out okay at the end of it. Number two, and is coinage from the casino, that be the house, not the gambler. House means what? The casino owner has a very small edge in every bet. So if it's roulette, they have a slight advantage because you can't bet on a zero. So they have, you can say, a 1/37 advantage. But by making sure they have lots and lots of bets, millions of bets, they ensure that advantage turns into a real profit. So what does that mean? That if you or your fund manager has an advantage, let us say they are right 60% of the time. So you have to make sure that 60% is actually spread out over a large number of bets. Because if you only buy 10 stocks, you might be right only in 2 of them and not 6 of them. But you buy 50 stocks and you have that much of an edge, you just control the risk on the 20 you are wrong on, then roughly about 30 you will be right on. So if you're an individual investor, again, start with a portfolio of 25-30 stocks so that you have some reasonable chance of having multi-baggers there, of having winners there after accounting for your losers. So that's the second mantra from me. And the third is that play everything, believe nothing. So what does that mean? That don't go for high conviction, don't go for storification, don't start believing your own investment thesis. You might be right, you might be wrong. So, the first show I did for you, Sonia, if you remember, we were talking about FMCG companies at a time when they were really the darling of the market. And at various points in our funds, we have held stocks like Nestle, but we never started, believing this whole myth that these are always all-weather stocks and these will do well, whether things are going well or not. And if you see in the last 1 year, many of them had a very long patch of not doing well at all and severely underperforming the market.
Okay.
So you can still buy things, but you need not believe the whole story or the whole myth around it. Number 4 is what I say, that don't be a bull, don't be a bear, be a hare. So what does why a hare? Because bears and bulls are large lumbering animals which once they go in one direction cannot change direction. A hare is smart, it's small, it's fast, and it can change direction when needed. That's so important. And plus, it has 360-degree vision. It is always alert. It can scan the environment and change. I'll just give you an example. For example, Chinese tech companies like Tencent, Alibaba, etc., they made us a ton of money talking about that last 1 year. And at one point in our global funds, we had 15% in China. But then we started seeing the signs. It started with that Alibaba affiliate and financials issue. And then we saw that one by one, the government of China was cutting down all these tech giants. So we immediately changed direction and we reduced our weightage very, very substantially in China. Whereas we saw a lot of people still continuing with the old thesis and not being able to say that what they were saying a few months ago no longer holds. So always be a hare. That is one. The other is that it's Richard Branson quote that I love. The great opportunities are like buses, and there's always another one coming along. So don't never ever in the market should you get caught up with FOMO. Whatever be the flavor of the day, whether it is Bitcoin, whether it is IPOs today, whatever, they don't think that if I miss this one, I will not be able to make substantial money. So always think carefully about where you're going to invest rather than just trying to jump onto whatever bus is leaving just now.